Hello everyone, welcome to Akira's Academy of Accounting and Finance. And the topic today is that we are going to start is how we are going to record the transactions. Okay, we studied that we have identified the transaction, we measured it in monetary terms. Yes, it can be measured in monetary terms. There is a source document, there is an evidence, or we have prepared a voucher for it. Okay, this process has been done. Now what? Now we need to record that transaction. Where we need to record it? In the books. Okay, this is the first time the transaction is going to get recorded. Okay, and the book in which it is going to get recorded is known as journal. Okay, so that is why this journal is also known as the books of original entry. It is also considered as the book of original entry because in this book, for the very first time, the transaction that has occurred, we are going to record it. Okay, now we have to record that transaction. How to record it? Okay, how we will record those transactions in the books. Okay, what we will do? We will pass journal entries. Okay, the way we record a transaction in the books is known as journal entries. This we can say the way we record a transaction in the books is known as journal entries. Now, how to pass the journal entries? I am going to deal with it. I have already explained you the rules of debit and credit. If you want to get to know, do watch my previous video. So, those rules we are going to follow when we are going to pass the journal entries. That is when we are going to record the transaction in the books. Okay, and this process of recording the transaction in the books is known as journalizing. This is what it is, the process of recording a transaction in the books, in the journal book. So what is journal? It is a book in which a transaction is going to get recorded. That is why it is also known as the books of original entry. The way we are going to record the transaction is known as journal entries. We are going to pass the journal entries in the journal book, and the process of recording a transaction in the book is known as journalizing. Okay, so let me show you how we are going to record the transactions in the journal book, how we are going to pass the journal entries, right? So that's it, simple format, right? But what are the particulars that we are going to mention? We are going to write, let's say, journal entries in the books of Mrs. Akira, in my books, right? For the year ended 31st March 2025. Okay, this is how we are going to start. We are going to record the journal entries. In whose books we are going to record? In the books of Mrs. Akira. For which year? For the year ended 31st March 2025. Means this journal entries belongs to the year 31st of which ends on 31st of March 2025. Like the year starting from 1st April and the year ends on 31st of March. Those entries are recorded in this book. Okay, here it will be a date column. Okay, here we will record the date on which the transaction, the particular transaction has occurred. Okay, not the date on which we are recording the transaction. It may happen that the transaction occurred yesterday. the accountant forgot to record the transaction, which usually should not happen, but he forgot to record that transaction and he is recording it today, right? Now though he is recording the transaction today, but the day, when did that transaction happen? Yesterday. So he has to mention the date on which the transaction occurred, right? Not on the date on which he is recording the transaction, right? So here we will mention the date on which the transaction has occurred. This is the particulars column. Here we will write what transaction has occurred. Let's say I purchased goods worth rupees 30,000 from Mr. Dheeraj, right? So I purchased the goods. We will follow the rules of debit and credit. What happens? Purchase account debit, purchases account debit. I am purchasing the goods from Mr. Dheeraj. Okay, now I am not mentioning whether I'm purchasing it on cash on credit. If it is there that I'm purchasing from Mr. Dheeraj and nothing is mentioned, that means I am purchasing goods from him on credit. Okay, now what does he become? He becomes my creditor. Now he becomes my creditor, credit the giver. Purchase account debit, debit what comes in real account to Mr. Dheeraj account. Okay, Mr. Dheeraj, he is the giver. We will follow, this is the traditional approach. As per traditional approach, as per the real account, debit what comes in and personal account, credit the giver. Mr. Dheeraj is the giver of goods worth rupees 30,000. Okay, now he is giving the goods worth rupees 30,000. This is my debit column. Debit amount is in rupees. This is my credit column and the amount is in rupees. Okay, so whichever account is being debited, that amount we will write in this column, and whichever account is being credited, that amount we will write in here in the credit column, 30,000. Okay, now what is this column? This column is known as ledger folio number. All these transactions are going to be posted into a personal account, into a particular account. Every transaction has a particular account. In those accounts, the transactions are going to get recorded. So when the transactions are, the process is known as posting. We will post the transaction. Okay, when those transactions will be posted in that particular book, that page number we are supposed to write it here. Okay, this is the page number of ledger folio. Okay, we are going to discuss about what is ledger, but just now, just remember, when this transaction, Mr. Dheeraj account will be there. That Mr. Dheeraj account is on which page? That number I am going to write it over here. Okay, so let's say 1st of October, I purchase goods 2025. 2025 is the date. On the year 1st October, I purchased, sorry, for the year end date 31st March, so 2024. 2024 1st October, I purchased goods from Mr. Dheeraj. So purchase account debit to Mr. Dheeraj account 30,000, 30,000. Here we will write the narration. Narration is the explanation, like what transaction occurred. So being goods purchased from Mr. Dheeraj on credit. This is the explanation that I am giving, what transaction occurred. And then I will make a line over here. This means that the transaction has ended. Okay, this particular transaction has ended, and that's why we have to make a line. Now, similarly, more other transactions will occur. We are going to record this transaction. Now, this particular page is going to end, right? What we will do, we are, let's say I purchased 50,000 rupees of goods. I sold 20,000 rupees of goods to somebody. So all these transactions are going to happen. Okay, sorry, this is 50,000. So these transactions are going to happen, and at the end, the page is going to get completed. Now, what we have to do, we have to total the debit amount as well as the credit amount. Okay, 30,000 plus 50,000 plus 20,000 is 1 lakh. At the end of the page, we are going to total the debit amount and the credit amount, and we are going to write it at the end of the page. Okay, this is the end of the page. We are going to write the amount, and we are going to write it balance carry forward. That means we are going to carry forward this balance to the next page. Okay, and this balance will be carried forward to the next page, where we will write balance brought forward 1 lakh, 1 lakh. And again, the transaction will happen. The amount will get total. Okay, fine. Understood? Is this clear to everybody? Now, here things that I want to mention is, first I have written it here is purchases. I have not said goods. I purchased goods from Mr. Dheeraj. I am not saying goods account debit. I am saying purchases account debit, because goods are going to be dealt in 5 categories. Okay. What will be the 5 categories? First will be purchases. I am going to purchase the goods. So purchase account will be there. Second will be purchase return account. Goods that I purchased, I want to return it. There will be a purchase return account. I'll mention purchase return when I'm going to return the goods. Then I will sell the goods. So there will be sales account. Then those goods can also come back to me. So that will be sales return account, and here will be the stock, the final stock that is remaining. So the goods, whatever we are dealing in goods, either we are purchasing, either we are returning the goods, either we are selling, or we are, the sales are coming back to us, sales return, and at the end what remains is the stock, is the inventories that is left with the organization. So these are the terms that we are going to use when any transaction related to it, we are going to record it in the books. Okay. Another thing I want to tell you, like this is what the journal book consists of. Okay. Now, there are numerous transactions that are happening. There are numerous transactions that are happening. Like I am purchasing from Mr. Dheeraj, I am purchasing from Mr. Aman, I am purchasing from Mr. Kishore. So numerous purchases are happening. Okay. So what, like instead of passing the journal entry of purchases, or purchase return, what there is a subsidiary books, the organization, large organization keeps subsidiary books. What is a subsidiary book? Wherein all the transaction, this will be purchases book, purchase returns book, sales book, sales return book, bills receivable book, bills payable book. Okay. Now, what is bills receivable? What is bills payable? I'm going to deal with it in the next video. But I want you to understand what are these books. Now, this is known as subsidiary books, wherein all the transaction related to purchases on credit. Understood? On credit. Whatever credit transactions are happening, we are going to record them. If it is credit purchases, we'll record it in credit purchase. Return purchase return, sales credit sales book, credit sales return, we are going to record it in the sales return book. Now These are related to the credit transaction. What we say about the cash transaction, what we have to do about. There are certain transactions that are happening which are not related to goods. Okay, there are certain cash transactions like I am paying the rent, I am buying the stationery, I am paying the electricity bill, I am paying salary to the employees. So all those transactions, for all those transactions we maintain a cash book wherein all the transactions related to cash, we will post it in the cash book. Okay, and after that there are certain transactions which are happening on credit. Likewise, if I have to pay a rent, I have made an extra payment for the next month also. Okay, so that is called as a prepaid rent. Now, for that, where I will record this transactions are related to purchases. This is related to cash. So, for that, I'll maintain a journal proper wherein any prepaid amount, any due amount, any, like, let's say there are bad debts. Okay, there are debtors. I know those debtors are not going to pay me back the money. Okay, now I have to close my books. Okay, I know it. I am like there's a concept called prudence. Okay, I know that this particular customer is not going to pay me the money. What I will do, I will write off that particular amount. Now that particular transaction I have to record it. Where I will record it? In the journal proper. Okay, the bad debts, or let's say the depreciation. We have purchased an asset. Now every year the asset is going to get depreciated. We are charging that particular asset expense in that particular year. Okay, so what we say, we consider it as a depreciation, that this particular asset has been depreciated. Now that depreciation amount, that transaction, where I will record it, I will record it in journal proper. So the transaction which cannot be recorded in this book, which does not related to cash, will be recorded in journal proper. Okay. So I hope you got to know what is journal, how we pass the journal entries. The process of recording is known as journalizing. You understood the format, how we prepare the journal, like how we prepare it in the books, how we pass the entries in the books, and if at all it's a big organization, large organization, for them we have to prepare subsidiary books. Okay, see you in the next video. Till then, bye bye.